The Piercing Line Candlestick Chart Pattern is a technical analysis chart pattern that's often used to identify reversals in market trend, particularly a downturn turning into an upturn. I'm going to show you what this looks like and how we calculate it at TradeOxy for our scanners. The Piercing Line Candlestick Chart Pattern is a 2-candlestick chart pattern. Once you have those 2 candles, you need to meet the following 3 conditions. First, you need to make sure that the first candle is bearish or red and the second candle is bullish or green. Then you need to make sure that the open of the bullish candle gaps past the close of the previous red candle, followed by the close of the bullish candle being at least 50% of the way up past the body of the previous red candle. This is how we turn those conditions into technical calculations at TradeOxy for our scanners. First, we calculate that we have a bearish candle followed by a bullish candle. Then we compare the open of the bullish candle against the close of the previous bearish candle and make sure that it is gapped downwards. And then we calculate the close of the bullish candle and make sure that it's at least 50% of the way up. Once these conditions are met, we can identify a piercing line pattern has been found, and we then apply it to all of our scanners. The theory behind the piercing line candlestick chart pattern is that it identifies a change in the pressure on prices for that particular stock or asset that you're looking at. Firstly, we can identify that previously there was pressure to go downwards on the price, which is the bearish candle that you would have seen. And that pressure continues into the opening of the bullish candle, where the price gaps down, which is identifying the price continuing to head downwards. However, over the course of that session, we start to see the price rising again. What I love about the TradeOxy platform that we've built is that you can take this analysis and apply it to any of the tens of thousands of different assets that we cover. Furthermore, you don't just have to restrict yourself to the assets, you can actually look at different time frames and use this exact same calculation on our platform at scale for any of the time frames that we cover. I think that's really amazing, but don't forget, all trading is at your own risk.